Okay, thanks so much, Justin. Hey, it's time for Financial Focus, and our analyst Steve Budin joins us now with some headlines today. I feel like everywhere I go, people are talking about housing, and especially here, people are like, should I buy? Should I sell? What should I do?
Yeah.
I feel like it's a boom. You know, houses are going quick, but then there's not enough houses to buy. So where are we as far as across the nation, nationally?
Yeah, and a lot of this does apply locally as well. The housing report came out today, and I always say whenever I report on these reports, whether it's unemployment, inventories, or business production, it's always good to look below the surface and see what is causing the report. So the headline might say how home sales are down, and you're going to think the economy is bad. Not necessarily true. In this situation, you just have a shortage of homes.
Right.
We all know people that are selling homes, and we know people buying homes. It's a seller's market. I have some friends who just sold a home. It took 2 days, and they got all cash offers. The folks that are looking to buy are having some issues because there's nothing out there, and it becomes a vicious circle because a lot of folks won't put their home on the market because there's nothing else to buy, so that keeps the inventory down.
Yeah, I actually have some friends who sold, but they don't really know where they're going yet, so they're going to rent for like 6 months, and like, we'll figure it out later because we got such a good deal to sell our house. So it's like, what do you do?
Right, no, and that's the dilemma. But I will say there's an old adage, nothing cures how high prices like high prices. And as this housing boom continues and prices keep going up, more and more people may get off the fence and say, yeah, I'll sell my house. So that could increase the inventory. The big concern I have, though, is interest rates are going up, mortgage rates are going up, so the ability for folks to borrow is going down. So a lot of the people that are out there buying homes are cash buyers. So if you're looking to buy a home, you really, at this particular point, if you see something you like, you probably should make an offer because it is definitely a very competitive environment out there.
All right, let's talk credit card, interest rates and fees. What's the $100 billion? Mark.
I know you're the big credit card take advantage of.
I am. I make money off credit cards. That's what I do.
You're in the vast minority.
They pay me with the cash back, and I just pay it off every month.
Well, then you're not one of these folks. $100 billion a year, over $100 billion is spent on interest and fees. So you think about the average American consumer, $100 billion really is getting wasted on paying penalties, interest, fees on their credit cards. So anytime you make a purchase, if you're paying interest on it, it just drives the price of that item up, right? And the average credit card interest rate is north of 15%. And as the Federal Reserve keeps raising interest rates, these interest rates are going to keep climbing. The cost of borrowing and the cost of servicing that debt just gets worse and worse. And it's a concern of mine because the economy can't continue to function on borrowed money all the time.
So if you see yourself kind of going down that path, what should you do right away?
First thing you do is you have to stop spending and put the credit card away. I know that's hard for a lot of people.
It's fake money, right?
You have to pay it back? Yeah. So that's the first thing you really should do is put the credit card away and call the credit card company. And it's so competitive out there now. A lot of folks, a lot of companies will give you interest-free transfer of balance promotions. So if you have a high balance, maybe do some research. If your credit rating's okay, you may be able to transfer that balance and at least buy yourself some time to pay down that balance.
All right, let's talk the markets, ignoring some of the tweets that are going on. I remember when it used to be the president would tweet or another leader, world leader, and all of a sudden the markets would go crazy. And now we're not seeing much. Like last night's tweet on Iran, when you're saying didn't really move much, the Dow's down what, 1 point, that's it.
Yeah, that's very surprising to me. And I guess we've, as a society, or even I should speak for the markets have just gotten numb when there's 50 tweets going out a day doing or saying this and that. The president was threatening Iran. He was also complaining about the interest rates going up. The presidents normally would be able to move markets, but when it's so common and so numerous, the markets really have just become numb to it. Now, of course, I say that there could be one tweet that comes out that does move the market, but right now, the markets, which really have a lot of information at their disposal to digest, when they see these types of tweets, the markets will decide, good or bad, what's going to happen. And really, what you're seeing is they're just being they're just ignoring the president at this point. That's
interesting, yeah.
And I always say I take the politics out of all of this. I just watch to see how the markets react to a lot of this stuff. And if this was 6 months ago and the president made that tweet about Iran, I think the markets and the oil prices would have an impact. And really, today, nothing.
Interesting. All right. Well, we know. Politics aside, you're all about the money, right? You're a financial guy.
Let's put it that way.
There you go. All right, Steve, thanks so much. And of course, we'll see Steve